Hello, Warriors. Big day today, Fed Day, and I want to give you a little bit of coaching advice before we get to the markets. And this is what I would say. I just want to read this to you. It's something that I wrote and this morning, and it goes like this: Powell is uptight. He's not having fun, trying to make up for the damage he's done. He says he's all in for this inflation fight. He doesn't even know rates are already too tight. So tread lightly with less leverage. You'll see things more clearly. Open your mind. So with that being said, let's have an open mind. I'm going to talk about currency, but I also want to talk about a few other things here. I caught, and people that are in our main chat room caught a big majority part of this range. Caught this, then caught this last week. My target was 77. If you go back to the videos, and we've had a little bit of a bounce here. I put some out here at 79 and a half, already took partials. I'm willing to sell it all the way up to 80.60. The reason I like the energy trade in front of all this red news is the weak dollar hasn't helped the crude market at all, right? Dollar's been weak. Here's your euro about to make new highs. Yet at the same time, the stock market has been strong, right? So we've also had risk on. And the discussion I had with Mike last Thursday about narrowing breadth in the oil shares gave me even more conviction. That's the advantage of working with people that are good, because it's part of your intelligence gathering. And when they see something similar, maybe in a different way, or even in a different arena, like shares rather than futures, it adds to your conviction on the trade. I think eventually we're going to take out the 77 level, and the next wave could carry us all the way back to the lows that we had back here in January, which is something else. If you really want to go back to YouTube, was something else that I forecasted when we came all the way back to test the breakout of this downtrend. So back under the lows that we had from yesterday, this market's in big trouble. And I can actually see the potential of, well, let me draw a little trend line. I could see the potential of new lows coming in the crude market, maybe playing catch up with what nat gas did, which I was wrong, which I thought was bottoming at the 340 level, which is now 278. So this will break the little uptrend that we have here in crude. And if you notice, another thing that I teach, and I like to teach when I'm also making forecasts and calls, is there was no divergence at the low in crude. It was a confirmed low. So knowing that you have a confirmed low and markets rarely bottom, when momentum confirms price, this opens up the door to the fact that we could have another new low, and maybe this time it won't confirm. So let's get to, I know this is going to be on FX Street, so let's get to the currencies here. Euro's on the verge of trying to break out. I follow some pretty good Ellioticians. They're calling this a wave 5 that we're in now. And perhaps the Fed, after the ECI being weaker yesterday, even though Powell is uptight and not having fun, that we could get a final blow off here towards 111. I talked about it in the dollar as well. I brought up this 102 level in the dollar, which we tried intraday but couldn't close above. Now it looks like we're going to press the lows. So perhaps we're going to get this final washout in the dollar. Something else I brought up, maybe we're going to the big round number of par, take that out a little bit. I am taking some risk in case the dollar doesn't wash out and waterfall with the Aussie right now, taking a shot that this might be a failing rally. Of course, my line in the sand is above the high. So that's my risk on that particular trade. Silver, you know, it's really been frustrating, but they sure are buying every dip. If the dollar gets smashed, perhaps we're going to have one more high above this 24.5 double top. You could see it better on this daily. I'm sure there's a ton of people that have been trying to top pick it. They're going to have their stops over the 24.5 level. And gold was really amazing yesterday. You know, it came all the way back from the 1900 level. Okay, almost back to the throw over. Are we going to make a new high? Could be. You know, if the Dixie sells off another 150 handles, this will be gold's chance to do it. But I can say this with pretty good certainty that next time under the low that we put in yesterday is going to open the door for 1850, 1840 and lower gold prices. So we'll see how that plays out with the Fed. I also want to talk about we're in a new month. We're in January. So I'm going to leave you with this thought, okay? S&Ps have had this dramatic advance. You know, we've broken out over this big downtrend line that the whole universe has been watching for a long time, had this failure here. But I want to point something out on get my telescope out here, guys, and show you the monthly chart that just finished. So it was what you call an inside month. Let me blow it up because I have a lot of fibs in the way. But you could tell that this month, the range was within this month. And a lot of people are construing that as bullish. And it could be. But there could also be, after a neutral month, neutral positive month, can set up reversal months and outside months. So the most bearish thing that the market could do is take out this month's highs, which we were at 4,100. So early in the month, take out this month's highs and then start trading lower on the month, back under where we closed yesterday, which was 40.71. But we have to take out the 40.95 level to take for this inside month's high to be taken out. And look at what happened here. A little history lesson. We had the market hold. We had an inside month. The market started off higher, and by the end of the month, it was lower, and you ended up with a reversal month. The most serious damage that could take place is that we both take out this month's high and then take out this month's low, which is all the way down at the 3,800-ish area, and have an outside red candle to the downside. And that would seal the deal for a break back under 3,400, maybe back towards the COVID high or so, 3,200. I know some guys are looking for 2,900. So this is something for you to keep an eye on a macro basis going into this month. You go with the trend, but if you see that we're starting to trade after taking out 40.95 sometime this month, it could be today if people like the Fed, because maybe Powell's going to be in a nice man today and in a better mood. What would shock the market would be going to half. 25 is expected. And you know what? There's no law against not trading today. And then tomorrow we have ECB. I'm not sure when the BOE is, and then we have NFP Friday. So, the markets will be here next week if you don't want to trade this type of volatility. And that's one of my reasons for trading energy, because nothing that the Fed can do has really affected energy. The dollar hasn't affected it. The strong markets hasn't affected it. And in fact, oil shares were the strength, the leadership of last year. And when I look at the XLE, had an update yesterday. Let me just drill down a little bit. So it held some support here, but back under yesterday's lows, I think that we could retest and take out the 82 level for a C wave. So I don't have to be right in 5 different markets, guys. I could be right on one. So if I'm in tune and I have the rhythm of a market like I have in WTI right now so far, I'm going to stay with the girl that I took to the dance. I'm not going to look around for something else to do when I already have a nice date. Okay, so that's my romantic metaphor for trading, and I want to wish everyone good luck. Consider joining us. Some of these WTI calls, they're made here. I made them again today in our main trading room on TradeGATEHub.com. Mike he's just amazing. And I talked to someone this morning that does IPOs, and she was mentioning issues that Mike is already on top of. So we have a great team here. And what you're trying to do isn't easy. And you can't learn experience. It only happens with the passing of time and living through stuff. But you can learn from the experience. Consider TradeView Markets to be your broker. Compare them to where you're trading right now. See whose platforms you like better, whose customer support, and what's most important to a lot of people is the spreads and competitive nature and reducing trading costs. So check out TradeView. And tomorrow I have a great guest, and in fact, we put out a tweet about it, and here he is. His name's Alan Edward, the Divergent Trader. He's an author. He really talks about trading psychology and the stumbling blocks that people have in trading that, is their paradigm. And here's what I think, just like real estate is location, location, location. Trading is psychology, psychology, psychology. It's all in our heads. So don't just count your pips, count your blessings. And I'll see you tomorrow morning, same time, same station with Alan Edward